Hello, everyone. Welcome back to the Trade Informer podcast. As you can see, we're doing things a bit differently today. Today, we're in the studio. I've got Andrew Saks, who is the Chief Product Officer at TraderEvolution with me. TraderEvolution is a multi-asset, multi-trading platform that hands control back to brokers. So we'll be talking a bit about them, but also lots of other things as well. Now, Andrew and I have butted heads a bit before, so hopefully it will be some good conversation over the course of the hour or so that we talk. So Andrew, thanks for joining me. Perhaps to kick things off, one of the things that we were speaking about offline previously was Bucks acquisition and what that meant for brokers and sort of some of the things that you were taking away from that in terms of building your own platform and things like that.
Absolutely. Great to be here, David, and nice to see you, of course. It was a very interesting subject. That particular occurrence came along quietly and went away quietly. It was never really mentioned and not really much of a big deal by most standards. But in my opinion, it's quite interesting because I suppose it can be used as a case in point because Bucks came along into relatively recent times. It wasn't one of the long-established big electronic trading companies of the traditional kind that we see. And it came along, and then suddenly it's bought by a bank. It was bought by a big bank, ABN AMRO. So what's interesting about that is that companies that might want to sell, whether for whatever reason, or list their company on a public stock exchange, or further their business somehow outside the realms of being a privately held company, have not been able to do that in the past. And even quite large companies that have been around much longer than that haven't garnered interest from a large bank, especially an investment bank like ABN AMRO. So my interest in that was particularly that Bucks was not really, I don't think it was really the fact that it was a trading company that they specifically would have gone for. It was Bucks' approach. Bucks had a modern approach. Yeah. They had a intuitive app. It was very much neobank style in its way of operating. And of course, it's been bought by the company that wanted that for it to be able to offer an intuitive style to its retail audience, very likely. They haven't said that, but otherwise they would have gone for a larger company. And we don't know. You might be able to tell me why Bucks sold to a bank.
Yeah. I think initially when we were talking about this and I saw you make the point online and things like that, I was a bit skeptical about it because I think basically, Bucks didn't make any bucks, basically. So they sort of split the company. Originally it had CFDs and equities in one platform. I actually think that was a better idea. If you look at their original VC pitch, they actually had this as one of the ways they were going to monetize their business. They decided to sort of split them in two. But I think the interesting point you made, right, is that the company probably had some residual value. That's and right. It will continue despite not making any money. And I think I wrote probably 12 months ago about the fact that if you're one of these meta quotes brokers basically, and you have no IP, you have no proprietary tech, essentially you're just your client book. And a lot of the time, that client book might not even be a particularly good one. And so it's kind of like, you want to sell or wind down your business, or you're not profitable, you actually won't, there's a good chance you won't get anything for it unless you have, say, a regulatory license that someone wants, or if today, perhaps if someone wants an NT4 license, they're going to try and acquire your business as well. But I think the interesting point that I think you made previously when we were discussing this was that residual value, that you actually still have something. And I think that kind of goes to the importance to some degree of having your own IP, having your own product, which is what you see, I would say, the sort of big split in the industry today, right? Between a lot of the big players that have their own platform, they're kind of going multi-asset. It's almost like a super app.
It's vital. It's absolutely vital. I agree with you. And you were right, David, about when you said about the when you mentioned a while back about trading companies, electronic trading companies that have a traditional framework and are using a third-party front-end first solution. they are unable to move outside that framework, you're absolutely right about that. So let's take the Bucks. We were talking about the Bucks example. Yes, let's say they did need to sell. They had a reason they had to sell, for example, or had to do something else. There was a residual value. The residual value is that they behave like a neobank and they behave in the modern sphere, so that their buyer would be able to bring that in and be sure that they'd be able to engage the more technologically orientated younger audience. So that's one example. There's been examples of companies that have been around a lot longer and have found themselves in financial dire straits or otherwise, such as ETX Capital, which was bought and became Oval, and then had to close their business down because they had a traditional style of operating model. They didn't have this intuitive app style. They didn't have a residual product which they could sell on. All they could really do was try to find their existing CFD clients a new home, which is not so easy. And of course, this is a fluid. This is not a product. This is customers always have their preference. They can go where they like. So there's been that example. Now, some of the, as you rightly say, the larger companies that have their own platforms, like CMC Markets, for example, this is a good example because CMC Markets, with their CMC Connect and this fabulous big CMC, I think it's called the Next Generation Trading Platform, which they spent famously $100 million or something like that developing about 5 or 6 years ago. Now you can see the fruit of it. They've moved their institutional division to Dubai. They are attracting institutional. They're able to sell white labels of their own making, and they're able to offer a multi-asset range. And more interestingly, we're able to do a partnership with Revolut. And that is the key to these things. There's the flexibility that actually has brought Revolut, which has got a lot of traction in the retail, non-bank kind of retail area, is now able to offer those products to its clients via CMC Markets. These companies that don't have such have either not invested in their own infrastructure and own trading platform, or are not looking towards the back end and what the back end is capable of providing in terms of flexibility for them to control how they want to build themselves forward and use third-party intuitive apps or different interfaces, or even develop their own intuitive products that attract the newer trader. And this is really the only way to avoid complete obsolescence.
Yeah. No, it's definitely an interesting topic. I think, the thing that anyone watching this would ask, right, is if you're using a company like yours, obviously you're here with TraderEvolution. TraderEvolution is also making trading platforms and trading software. But, we've highlighted all the benefits of having your own IP. But then if I come to you, presumably, I don't have my own IP. So so if I'm paying you, what benefit do I actually accrue from doing that if I'm not keeping that product, if that makes sense?
I think the best way to look at it is that there should be, you can either develop your own platform from scratch, which is time consuming and very expensive. I recently met with a brokerage in Australia that has done it. Just complete. More and more companies are doing it now, by the way, are building their own, whether it's just a front end or whether they are actually going to the extent of building their own trading platform from front to back. So there is a company in Australia I met with recently. They have built their own and they've just completed it. And they had 100 developers on site for 7 years to develop it, which is a very expensive endeavor. And it's about to be released. So not every company has the capital resources or the time to do that. And now, that was 7 years ago. Until now is the release, soon it's coming to fruition. But of course now the development cycle is so rapid that it's very hard to not become obsolete whilst you're in the development period of a platform, because everything is changing so quickly now. So there's that option. The other option is to have the front end first platforms, which means there's no flexibility at all, and you can easily get left behind, and you can't offer product, and you're at the whim of the provider, who can just change their service however they feel like it according to their terms, and you would have to go along with it. Or you can have some sort of hybrid model, which is really, for example, the TraderEvolution backend. We're a backend first trading platform provider. It's a bit like a hybrid model where we don't specifically develop. Our platform is a back-end platform, which is deployed straight onto the infrastructure of a brokerage or a hedge fund or bank. And that company has then the ability to connect to any liquidity provider or any venue, any listed product venue, with or without middleware. So there's similar flexibility to you'd have if you built your own back end, and to be able to connect any front end and provide any product to their clients, even if it's their own or a third party one like TradingView or something like that. So you have a hybrid approach which takes much shorter time to market, costs a lot less. And yes, you do own your own IP, because whilst the trading platform is basically leased from us, as a brokerage, it's deployed. The brokerage controls it. It's deployed onto their infrastructure. So therefore, the intellectual property they build is theirs. The mobile apps they issue, they are the publisher. So they're building their own IP. The white labels they issue are their white labels, and they can issue them according to different markets, different product ranges, just the same as you would if you had your own platform. So it's kind of a hybrid approach of way of doing it. But it's of course the key factor here is the ability to secure your own IP, as well as being able to move with the times and actually stay ahead of the curve and keep being able to offer intuitive products to different applications, front ends, different product ranges, different asset classes, as and when you want, rather than as and when you have to wait for your provider to allow you to do so, if at all.
Yeah. Okay, so one of the points you touched on there, right, is the ever-changing role of technology. It's quite a corporate soundbite, but I think it is true. And for sure, you've seen that in the last, let's say, 12 to 18 months, where you have this big rise in artificial intelligence, in AI. From my point of view now, I've seen a few ways that this is actually can be used interesting. I think whenever something like this emerges, there can often be so much hype around it that you become cynical, or I do anyway, about how much utility there actually is in some of these products. But I've seen Nemo, which is a new app from Xfinity, the kind of Alpari owner. Right. They have some AI built into their application. There's some other sort of interesting ways that you can use it around, say, EAs, or just doing research on, say, financial analysis, that kind of thing. So I'm curious if you see real, tangible use cases for it, and also demand from it from the client side. So if I think about why that might be the case, right? Presumably the client goes to the broker, and then the broker will go, oh, that's an interesting idea, and then potentially come to you, right? I mean, so do you see those sorts of things happening?
Yes, all the time. And we are starting to see a lot of requests from clients to actually resolve these issues. And if you'd probably asked me this a year ago or so, I'd have said, oh, well, AI is coming up. It's going to be used for content. It'll be a quicker and more efficient way of getting usable content, actionable content to traders. But now it's actually, the development cycle of that is enormously quick. So now here we are, just a short time later, and we're finding that it is definitely, in fact, going further than that. AI is the new internet, really. I think we will see a totally new way that users will approach the internet. The information is presented to them in a certain way that's very different to how you or I would have used the internet until now. The younger generation who are starting to use the internet, coming up to the age where they would start to use the internet in a commercial setting, will not approach the internet the way we approach it, which means that the demand for the trading platform and the way they will interact with the markets will be very different to what we're seeing now, to how users do now. For example, it might be that different devices have different styles of trading interfaces according to the way AI works with device. You might see more voice operation on mobile devices. You might see even these glasses where you're walking around, and for example, AI. Let's say you're in Oxford Street, and you want to go to a shop that sells a sandwich because you want lunch. You just think or say sandwich, and then what will happen is it will blank out the shops and show you the one with the sandwich. So you just have to go straight to it. So the whole possibility of this is a new world, really. So to be able to stay on top of it, companies will have to be completely flexible in terms of the way they offer their front end. So a 20-year-old piece of software that looks old-fashioned is not going to work at all with the way that the new tools and new information resources and things are coming up on the internet will not be able to work with those types of platforms. So it will have to be very flexible, and brokers will have to be able to develop to adapt to that quickly. And then when it comes to, you really mentioned a good point about these analysis tools and things like that, because they are currently the way that the internet, the way the AI content, actionable content and generative AI will work, in my opinion, is that it will speed up all of this and rationalize everything, condense down, get the right info for the right circumstances out. So you'll see AI interfaces in trading platforms, which are all according to an AI, using the internet rather than using an actual piece of native software, possibly. So we just launched our own standalone AI. So that's for all sorts of trading purposes. It is standalone AI, which we showcased at the Sydney conference, the Finance Magnet Sydney conference just now. So it's quite really a case of having to develop these AI tools accordingly, because it looks to me as though the modern internet user, and therefore the modern trader, the new generation of traders, will approach everything completely differently to how everyone has thus far. So I think that is really the thing that everyone has to bear in mind. Otherwise, they're going to have a big obsolescence problem.
Yeah. Okay. So I take your point, and I think there's probably some truth to what you're saying in some cases. I mean, the thing I'm interested in is, today, do you see any things that say come out? I mean, in terms of client requests, if you can talk about them, like what sort of things
absolutely.
are, what sort of things people are asking for, or what sort of use cases there are? Because you hear a lot, right, about someone goes, oh, I've got a new AI thing, but it's kind of like, well, is there like a tangible use case? Because if I give you one example of what I mean, where there have been AI in theory tools to transcribe speech to text for basically
natural language processing.
For a long time, right? But a lot of the time they just aren't very good.
No, that's right.
So I go, okay, the whole point of something like this is to improve and basically speed up what is quite a boring and mundane task. And then you can end up wasting so much time just uploading it, and then you get the results not particularly good, you have to edit it, and then you go, okay, after all this time, it would probably have just been as quick to just transcribe it myself. And so I guess my point being, do you feel like there are sort of real products with sort of meat on the bones where you go, okay, that is a fundamental change to how people were doing things previously? So I suppose just those two questions, right? Like, one, what sort of tools are people asking for? And two, do you see any kind of concrete, really good products that are making a difference to the way that people interact with companies?
Yes, indeed, I have seen exactly that. And where I think it looks to me as though brokers right now are looking at is, first of all, there's a cost issue. It's with the CFD brokerages particularly. One advantage of having a multi-asset platform on one account is that they can cross-sell their products, and they can get to better, more stable asset classes where you have you can possibly bring in CFD traders, and then they'll start trading equities and futures and stay longer. CFD only is becoming an issue where there's a high turnover, and it's been like that for a long time. So the marketing cost, the acquisition cost per client is very high now. And then you have that goes towards a novice audience. It's just casting a wide net. People are depositing via a credit card, for example, and it's much less than the cost of the actual acquisition is being deposited. 3 months later, that's it. And then they write a bad review, and then that's a big problem. The whole thing is a loss. Like, there's an expensive cost of acquisition, no client long-term, no lifetime value of a client. Client loses, writes a bad review. Regulator says CFDs are bad. It's kind of not a good way of doing marketing. So what AI can do is actually is find those traders for you, and actually reduce your marketing cost, and actually find more relevant people who would trade specific asset classes, and therefore you get a better quality of client for a much lower cost, if any cost, and keep them longer. That's one aspect. That's just a marketing aspect. But there's lots of other things as well. For example, making sure that you are giving the right technical retention. This is also a retention aspect. technical analysis and so forth, offering educational tools is really important. A lot of brokerages have been doing that for years to try and retain their customers. So I think certain AI initiatives might usurp some of the traditional technical analysis tools that get used at the moment, and therefore be more adaptable and more live and quick to use, and not so restricted to what a third party provider can offer. I'm not saying those things are obsolete, but it's a possibility that is coming. That's going to start now. So those are marketing aspects and revenue protecting aspects, you could say. But there's also development aspects as well. For example, writing scripts. AI can be used to write scripts now. So you mentioned EAs, and one of the reasons for the popularity of certain legacy platforms in the past is the EA compatibility. But life has moved on. I mean, this was a long time ago now, and writing scripts that can possibly be done by AI. Nobody needs to be a programmer anymore. These EAs were written by very clever programmers. That you have to be a software engineer to know what you're doing and to be able to get those automated things to work properly. With AI, maybe there's a future for writing scripts or for developing interfaces that traders could use, and it can actually connect them to a back end and have their own custom trading platform that they are very familiar with that works according to what they need. And then you have a support issue. You have customer support can be done through AI so that you have relevant results for relevant purposes, and it can be more on a kind of lower level aspect. It can be more efficient and more reliable and less costly to do it in this automated fashion. And it's also our industry being a 24-hour market. You don't need to worry about shifts. You can have a 24-hour automated AI system, which is very effective and very efficient. So there's that. And of course, the last one, which, as you know, our platform is we do regular updates. We do about 5 updates a year, where we 5 releases a year with some updates to the platform, and they're all client-led. These are led by customers, so we take on what they want, and we keep making it so sure that the back end is at the forefront of technology. So we've recently introduced the AI, a standalone AI platform, front-end platform, and that's because it's getting to the point where the newer users want to use these AI tools, because of course we're preparing for the point which I mentioned earlier, when users will not act, where traders won't interact with the internet even, let alone the markets, the way that people do right now. Yeah. So you need to have some way of them being able to use let's call it the modern internet, the new internet, because it's, in my opinion, AI now is the development of AI and the way it's changing the world, the way people access information, is as revolutionary as the invention of the internet itself. It's the next generation of internet. So being able to have an AI tool, an AI assisted, an AI tool ready is really important for those traders who are going to approach the internet in an AI-driven way.
Yeah. Yeah, no, it's all very interesting stuff. So one of the things you touched on in your answer, right, was EAs and their sort of popularity, and then their kind of use being behind the popularity of MetaQuote's products, to be honest. And one of the things I've always found interesting about that is if you look at, say, the European market, and if you speak to European brokers, say in the UK, or someone like XTB as well, they will not really use these platforms, right? They don't really use MetaQuotes. They see very small volumes there. If you look at XTB, I think it's 7%. I've spoken to pretty big players in the UK who see very small amounts of flow that go through these platforms. Conversely, if you speak to someone who's very big in Asia, it's almost like they feel like they cannot do business without it. So how do you, I suppose partly for your, do you think that's true? I mean, do you think that's necessarily the case?
Well, it certainly has been the case for many years now. It was always, I agree with you. I think me personally, always used to think along the lines of, these kind of third-party platforms which are front-end driven, like MetaQuotes or similar, are very popular in those regions because of the automation of trading and the EAs and so forth. And then you have areas where there are large brokerages like UK, Australia, some places like that. XTB, that's a huge company. So those are more they've built their own and they have their own IP. And if you look at some of the way that they are, some of the value of the intrinsic value of those companies is very, very high.
Yeah.
You saw this, one of the shareholders of XTB recently cashed some of his shares out. It was an enormous number.
Yeah.
So these are, you can't do that unless you have built a business based on your own IP.
Yeah.
So there's a different model. And of course, some of the models of the EA style, EA driven models were very much affiliate marketing based. I don't consider that to be really the way a trading company should operate. They affiliate marketing. They have a marketing based model where they would get a trader, a novice trader, bring him up to speed using a third party interface like that. He will then connect an EA to it. And then potentially, once he's got to the point where he can't go any further, they will say, now become a portfolio manager. Yeah. So they use a MAM account, but that's not really portfolio management. It's just it's just attaching lots of other accounts to it and doing the same trade, which then connects to an EA. And the idea of that was to do more turnover and, of course, eventually split the commission. It was very much affiliate marketing driven rather than actually capital markets orientated. Yeah. So that is going to get to the point where that won't really be a way to do things anymore. You know, the trading world now is very mature. It is, those novices were novices 20 years ago. They're now highly experienced and they're very, very good at what they do, and will want more out of than just affiliate style model like that. So they're looking more for these intuitive platforms. One example is TradingView. You can see how much TradingView popularity has gone up over the last recent times. Yeah, it's huge, and it's a social network, and there's lots of experienced traders there. And every brokerage, most brokerages, really want to get onto TradingView one way or another. Yeah, and it's very difficult for them because there are those sorts of third-party platforms will never do it because it's a conflict of interest for them. Yeah. So what you can do is, for example, use TradingView as a front end and execute your.
Yeah, I've seen quite a few people do this.
Yes, so this is now starting to be a thing which is very, very good. So that is a way of, you could even just use, you can have their charts or you can have broker integration, but you could, if you wanted to use their actual TradingView, have a trading platform. You could use the TradingView trading platform as your front end, and then traders on the TradingView platform will see their trades, but also execute from them. It'll go through your brokerage. Yeah, so that's one way.
8cap has actually done that in the UK.
Yes, they have. Yes, they have.
So if you sign up
for
8cap in the UK now, you can only trade through TradingView.
That's right. Yeah. That's right. So there's a few of them doing it, and there's a lot in process. We have three types of integration with TradingView. And one of them is that to offer the trading platform. The other is charting library as broker integration. So that's a way which means that the front end platform is no longer aimed at just connecting as many zero sum style accounts and running them down and then never paying out. This affiliate market model is gone immediately by that. That's one example of where nobody wants to do that anymore. So, and that's still a platform. Once you start seeing other the development of the way the front end goes from now on, there will be other ways that traders will drive the way. You see, before it was driven by the platform, by the platform. The demand was driven by the platform and outbound sales. Now it's driven by the trader. And the traders are demanding new asset classes, new types of ways of interacting with the markets, ways of getting onto social networks and being less restricted in their product ranges. So this is just one example of where I think you'll see demand saying, okay, now I want to trade on this and I want to execute via this as well. Yeah. And if you're stuck with a legacy product, it won't be possible.
Yeah. No. Well, I think another interesting point about that is if you look at moomoo, there's a company called
Yes,
moomoo.
They are huge, by the way.
Yeah, I think they have something like
Australian company, right?
Based
in
Chinese
based in Australia. Yes, yeah.
No. So they have they just set up an Australian entity, but they have they're based in Hong Kong and they have somewhere in the US.
I think their head office in Hong Kong. You're absolutely right. Yeah. Yeah. But they're huge. They're a massive company.
Yeah, but so I always think people talk about the Asian market, people not being interested in a kind of new product or a proprietary product. And you look at how successful they are, you could argue that the reason they've done well is because they have stocks rather than marketing FX or something like that. But I think the point holds that if you look at their success, it's hard to argue that, the only people that want the kind of IG style or plus 500 style platform are in Europe, and then there's just the rest of the world just wants another platform.
That's not the case anymore. It possibly might have been some years ago, but it's not the case anymore. And actually, Southeast Asia, interestingly, is where some of those initiatives like moomoo are coming from, and they are massive, and they're doing very, very well. And they are offering multiple assets. And not just there either. You have companies in Europe doing it now too. Like for recently, you notice at Robo Markets, they stopped issuing CFDs in Europe. Yeah. And that's because a few years ago, when I don't remember exactly where, but not so long ago, they bought the source code of their platform provider. So it's now theirs. They've got their own platform, basically. Yeah. They did it by buying the source code, which means they can choose what they want to offer, what asset classes they want to offer in whichever markets. They're not just CFDs. So if it was too much out of scope for them to offer CFDs, they would say, okay, well, we'll offer listed products in Europe. Yeah. So this is the way now things are going, and it's not going to be. moomoo is an example because they are offering a multi-asset marketplace. They hired the previous CEO of Asia from CMC Markets to run the Australian division, and he is very experienced in the CFD and multi-asset world. So he comes from the brokerage industry, and has gone in there, and they have a very large range of products, and as a result, it's not just connecting a homemade EA to a CFD platform that's generic isn't going to work anymore. Just not going to work.
Yeah. Well, I think there's room for both. I just think that there's the idea that you can't do well with a kind of your own product in other parts of the world isn't really true. You can actually also see that with let's say less respected companies, if you want to call them that, but someone like Olymp Trade or Pocket Option, right?
Yes,
you don't necessarily have to love what those guys are doing, but if you go on any kind of app downloads or anything like that, they're doing really well. They don't make use of anyone else's product.
They are.
But one of the things you've mentioned there, right, is the fact that a lot of providers, it's not really a new phenomenon anymore. It's sort of 6-7 years that people are adding equities. You see a lot of people in the UK now doing options, kind of following on from
options last year was a big trend, wasn't it? We saw a lot of companies rush to add options to their product range. You're right. And the thing is, some of them had the ability to add it because they had a multi-asset back office and were able to connect to those venues, be it via a market maker or via direct certification with an exchange for some larger companies that want to pay exchange fees. That was a big trend. So some of the large companies like Interactive Brokers have been doing that for some time. But of course, the ones that wanted to do it and didn't have the infrastructure ended up having to have 2 or 3 platforms. And I've spoken to quite a lot of brokerages who have got several platforms for different asset classes. Maybe they've got MT4 for CFDs, and then they've got different back ends and different front ends for other for listed products. And that's expensive. You need a big team. It's fragmented. It's a fragmented way of operating, and then you can't cross sell because the front end platform, the way that the stock trader or the equities trader approaches that particular system would be very different to the CFD system. So it would be very hard to get a CFD trader who finds that not to be a long-term proposition to then say, okay, well, let's not do that. Maybe you trade stocks. And he might say, oh, well, I have to learn a new platform and it's going to be Whereas if it's all on one platform, one account, they can just say, okay, well, I know this platform. It's no problem. It's listed. It's all part of the product range here. Yeah. So, and at the same time, the brokerage gets one core for their business, which means they don't have to have administration of lots of different back ends, which is expensive. And, in the end, this is a thing. I've been approached quite a lot by companies wanting to solve that problem and actually consolidate the number of back ends and number of trading platforms that they use to take it down to 1 or 2, and still and at the same time be able to offer more front ends, more interfaces, more products than they would have had with 5 or 6 different platforms.
Can you do that?
Yes, because you can have one back end, and then you can have different trading platforms for different. You could put whatever front end you want onto any market that you like, any asset class you like. So you could have a different mobile app for novice traders, or you could have an investing app for portfolio managers. You could make your own. Let's say you're trading the market in Brazil. You're a broker in Brazil, and you've got listed derivatives traders there. You could have one specific to them. You could have another one in England for British CFD traders that looks different. You can do that. So you could have all of those and keep them, even develop them yourself or connect third-party ones, whilst having one back-end core. And that rationalizes, keeps the cost down, but also keeps the number of opportunities of being able to offer different products to different customers. Or you could have everything on one platform, all products, listed products, OTC, all on one platform. So there are lots of requests at the moment from well-established companies that have been around a long time, got a lot of support staff, who are operating large systems and lots of different fragmented back-end core trading systems, who are looking to rationalize that down whilst approach different products and markets at the same time. That's quite a thing at the moment.
So as in they want to have a different, basically like what you said. So if they're going to Brazil, they want to have an app for Brazil. And then if they're in the UK, because I think there's always a bit of a tension there where, do you have a product that's sort of universal, or do you make it more localized? So if you look at, say, IG in Japan, they have a very localized website and app and all that kind of stuff.
They do.
But equally, just for convenience sake, it can be better to have something
like FXCM in China. They're huge in China. Well, they had been huge in China, so they had to cater for the local market, and everything was done from their offices there, and everything was localized.
Yeah.
But of course, that's a big company. They have their own systems and so forth.
Yeah.
But yes, I mean, ultimately, you're absolutely right.
But as in, do you guys get those kinds of requests where it's like, can we make this for this place,
absolutely.
this for this place?
And it's increasing because it's not such an easy task to go from being an OTC retail CFD broker to start offering different products in different places on different exchanges. Because it's not necessarily where the clients are, it's where the products are listed, it's what exchange, because going from OTC products, which you can offer as a brokerage, as a market maker, anywhere, and it could all be generic and all be the same, it doesn't matter. It's quite easy in that respect. Starting to trade exchange-traded products, to offer exchange-traded products is a different matter, because the exchange venue has its own rules and licensing systems and execution models. So an exchange in, let's say, New York Stock Exchange or NASDAQ, trading US equities on those, will be very different to trading on an Indian stock exchange, like,
NSE.
or Nifty exchange or something like that, or some raw material commodities in Brazil or something like that, or Australian stock exchange. They all have different rules of execution and different ways of working and different licensing systems for, I don't mean regulatory, I mean when you become a member, exchange member, the licensing is different. So therefore, being able to offer a multi-market, and I mean global markets, multi-asset product range with listed products and OTC on a multi-market basis, means that each exchange is very different and each has different execution and different ways of operating. So to have that, you need to be able to approach those and be able to offer those according to those rules, to be able to be genuinely a multi-market company. So that's really something that's considered. And actually, you can do it through a market maker, which keeps the cost down. Or if some companies are if they're large enough, they can pay the exchange clearing fees and actually certify our exchange directly, our platform directly against the exchange. So they're executing directly onto the exchange.
So they can't just plug directly into you guys?
They can.
Okay.
Yeah, they can. They can do that, or they can go direct. They can bypass any middleware and go straight. And if they want to pay the fees, and expensive. But most of them, they go through a market maker.
Yeah, but so the other question I have there, right, is I think if you look at, again, the sort of going multi-asset, which I think has been going on for like 6-7 years at this point. You still have a sort of split in how people do that. And I think, so CMC, who you mentioned, right, is probably an interesting example of that, because if you go to Australia, which is now actually their biggest business, then everything's very integrated. So you get crypto,
that's right.
You get
absolutely,
Australian options, you got stockbroking, and then you have CFDs, but it's all in one platform. But then in the UK, for whatever reason, they went, no, we're going to have CMC Invest, which is a kind of standalone product. And then we'll have trading and spread betting and stuff as a separate one. And people are doing that in different ways. So I'm curious from a sort of platform or back end provider, are more people coming to you and going, we want to have, an app that is our brand, but it's just for stockbroking? Or do they go, we want everything and we want it all in one app?
Well, you have both. There are use cases for both scenarios. And actually, at the moment, there are quite a few projects of both types. But certainly offering different product ranges and being able to offer apps for investing, apps for different purposes, and front ends for experienced investors and novices and listed products, so is a thing that's now coming about. So yes, you can have our platform. You can have everything on one platform in one account.
Yeah.
Or you can have everything on one platform and on one account, but different platforms for different types of market or users, up to the broker entirely. So you mentioned CMC Market. That's a really good example. So what a broker is achieving by having a TraderEvolution backend is exactly what CMC Markets have done, but without the cost of development and the time takes to do it. So the very expensive, it was 100 million or something like that, and it was I think 200,000 a month in support costs. So companies like that don't have, not everyone has the money. So you can achieve this nowadays. There is the technology to achieve the same level of control over your business, the same level of retaining your own IP rather than having it on somebody else's product, the same level of offering whatever product ranges you like in Australia, like CMC Markets in Australia, where they're offering a unified system with everything on it, but then offering different systems here. You can do that, anything you like, but with just a monthly software licensing fee and without the cost of development. So it's a kind of, we see it as a hybrid model, really. It's a way of getting that end result without actually having to develop it yourself.
Yeah. No, it's interesting stuff. I mean, and as a follow-up to that, right, I think one of the things, again, that I've seen in the last, let's say, 6 to 12 months is that there's definitely a lot of senior execs at the bigger firms who seem to have realized or believe that basically being first to market with a particular product is the way to win market share, the way to get more clients, the way to make your company more attractive in some way. And I think if you look at, say, the UK, I think probably 212 is the best example of that, where they've been really rapid to bring in new products and also make their existing product pretty good. Obviously, if you're outsourcing, it's almost like that's out of your hands. So if you are, if we're saying that, okay, someone should potentially go to TraderEvolution, right, or is thinking about doing that, but they also have in mind this fact that, okay, to win, I need to be the first person to bring X, Y, Z to market. How do they do that if they're not actually in control of their own technology?
Yeah, that's the thing. They are in control of their own. That's the thing. They are in control of their own technology, because this is now an interesting shift. It was the case that brokerages were afraid to go outside the box because they wanted to onboard quickly other people's clients who were used to a similar platform, and it was all. But that's an easy come, easy go. They would also go off somewhere else, and you have no IP and so forth. Now, many brokerages realize that the correct way is to be a pioneer, to develop your own brand, to be your own, to have your own recognizable product range that makes the clients loyal, whether they're institutional or retail. They want to have a specific USP of why that brokerage is doing what it's doing. So as you say, those executives are striving to try and get first to market, which is speeding up the development time and making all sorts of different product ranges appear and having a big differentiation. And I think the only way of the future is to have a differentiation of companies. You have that in every other industry in the world is the differentiation of products and loyal customers because they like that specific product. So to be able to achieve that, the only way is to be in control of your own back end and your own destiny as a company, and have the flexibility to be able to build and customize and develop. So the TraderEvolution platform, you do have your own. We deploy it onto the brokerage. It's not hosted; it goes to them, and the brokerage operates it. Their team, their tech team, and dealers and everybody, their staff operate it. So then they can customize, they can develop on top of it. They can add. We talked about earlier that where they can add any market that they want, any front end. You can develop your own. You can do whatever you like. Yeah. So you can keep right at the front of the trends, because it can. The brokerage has the decision-making process of which way a brokerage wants to progress its business is in the hands of the brokerage and is not constrained by a third-party technology provider. That's the thing. So a TraderEvolution a company that uses the TraderEvolution back end can do pretty much what a company that's developed its own platform can do.
Yeah.
And therefore owns its own IP and can be in charge of own destiny. If you wanted to develop something to get first to market with some new platform or some new initiative, it can be done because we have it's fully customizable.
Yeah. So if I'm, let's say, trading 2-on-2 and I want to add options, which apparently I've heard is something they want to do, they can just call you up and go, okay, we want options.
Absolutely.
Well, let's plug in.
That's right. They can call up, they can say, well, we would like this is the venue. This is the options venue we want to execute on. We want it to show up in the same platform, and it needs to be on, let's say, we want it direct, so we can connect directly to that exchange. Or if it's through a middleware market maker, we can correct. Well, there's already quite a lot of integrations, but they would tell us, and we would do the integration work, and that's it. Then they would manage it, and they would admit once it's up and running, that's it. They would administer and manage it. So it's fully flexible. They can go anywhere they like with it, and they can offer it on any interface they like to any client rate, any market or any type of client they want. So it's very similar to developing yourself, and actually the time of doing it is quick because it's all according to the ball is in their court basically.
Yeah. Okay. Well, that's amazing, and I can see that our podcast studio person is telling me that the time is running out. So, Andrew, thanks very much for taking the time to speak to me, and thanks very much for watching. Hopefully, we can see you again soon.